My name is Audra Keller. I am with Audra Heller and Associates at Keller Williams. We have been doing my version of a podcast for a few months now, in which we are inviting different guest speakers to join us. And sorry, my computer's talking to me. There we go. Now we're live. So anyway, I've invited different guest speakers to come join us and speak and let us know what's going on in the world from various different things. Obviously, I'm in real estate, so we'll have some talk about home inspections. Most recently, I have been helping a client, and her father passed away. Her mother has since passed as well. And she's like, Audra, I have a house to sell. It's in the will. We're ready to go. I'm like, not necessarily. So I am working with her attorneys to get everything put together. What I want you to know is someday all of us are going to die. We're all going to die. It is what it is. And the best thing that you can do is to plan. When you go to sell a home, it's not just putting a sign in the yard. It's planning. It's getting a strategy. I was introduced to an amazing person named Marc Shaffer at Searcy Financial, 3 or 4 years ago. Marc and I have been working to set up a plan for the day that I die, for the day that my husband dies. It sucks. I don't want to talk about it, but I know it's a fact. And so as long as we go through the process and help get a strategy, it becomes more and more calming that I am not going to leave my family with a catastrophe, whether it's hiring attorneys, going to probate court, paying crazy taxes. Am I setting my family up for success if I pass away first, or if my husband passes away first? Let's get a strategy. So today, again, I've invited Marc Shaffer to join us to talk to us a little bit about this planning and things that you can do to make sure you're setting yourself up and your family up for success and not leaving them with a ton of stuff that they have to deal with while they're also grieving for you. So Marc and I were talking, and Marc came to me and he said, Audra, I have something called the 5 steps of knowing where you stand. And Marc has been working with us, and I say us, my husband and I, on this process as well. So Marc, first of all, welcome. Thank you for joining us.
Yeah, thank you for having me, Audra. I'll kind of reframe what you said in the beginning about planning for death, but that's just a piece of a financial plan. So I want to talk about some of the more fun and living your ideal life and the stuff you should do along the way while being well prepared for passing away, because we don't know when that's going to happen, right? And so part of planning for the future, obviously, is knowing where you stand. Oddly enough, that happens to be our tagline for my company. But it's interesting when people come to us as a financial advisor, they often think of retirement as the one goal they have in mind, not transitioning in a state. And there's all sorts of other goals we'll talk about. But when I meet with them, I was like, well, what does that really mean to you, right? And unfortunately, there's not this magic formula. And then we say, all right, well, you need to do this. We need input from the client, right? We need to know what your goals and objectives are. And interesting enough, sometimes when we meet with people, and oftentimes it's a husband and wife, spouses, they aren't on the same page. One wants to retire at 50, one wants to work forever because they love their job. One wants to retire yesterday and be a stay-at-home, which is fine too. So part of knowing where you stand is knowing what your goals and objectives are. And like anything you do, goals and objectives and writing them down is a big deal. They got to be measurable. They got to point back to your vision for your life. They got to consider the time horizon and what it will cost to achieve them. Now, oddly enough, it doesn't mean that you have all these goals that you can meet them all. So part of my job becomes that we look at everything you've said that's important to you and figure out how to prioritize which one you want to go and get or tackle, understanding that not all of them will be accomplished. So goals and objectives are obviously very, very important. We actually, Audra and I, actually work with the same coach. So it doesn't have to be a financial accountability partner. You can hire someone to be a life coach. We'll do a shout out for our friend Kay Blonde. She does a wonderful job helping me personally. But finance is one part of life coaching. So let me talk about the next step of knowing where you stand. Finances. How many people feel really good about knowing what their budget is and where they're at? Audra talked to me a little bit about how you felt when I said, what are you spending every month and what's coming in and going out?
Yeah, that was one thing that I'm like, well, the money's in the bank. I have a budget for work, but I never had a budget for home. And that has been so life altering, because I think my biggest fear is I kind of want to retire, but I don't know when I can. And so I remember when you had me do a budget, what you're living on now. Okay, I got that. What are you going to project when you retire? Oh, well, I don't have kids' school. My travel is definitely going to double or triple because I want to travel. So yeah, that was very helpful when you had us do that.
That's exactly right. So finances, a lot has to do with budget, but to your point of, I can't tell you what you need to do between now and when you reach retirement at whatever age that is until you tell me what you need, right? And so many people don't know what they need. So it's an exercise we take them through for understanding where you stand today and what your expenses are, and knowing that in 20, 10 years, some people are already in retirement, what spending changes can happen over time, right? And in between now and when people get there, our job becomes to help them eliminate debt, whether that's a mortgage, student loans. But a lot of people think budget is a bad word. And a lot of people hate that exercise, and more people don't become committed to it until they're closer to retirement. But in order for me to give great advice and my team to give great advice to people, we need to have kind of a target to shoot for. And that input is big because it's on your part. I don't know what other people use, but I've used the old trusty spreadsheet. I have all my expenses in there, have my income on the top, have expenses down below. And the easiest way to do this is to know what your fixed expenses are, the ones that don't change over time or change slowly. The mortgage, you might not change at all unless you refinance, but that might not change for 20 or 30 years, right? Variable might be the things you enjoy doing from a hobby standpoint, taking care of kids, going out to eat, living your lifestyle. But you need to break those down and know where they stand so that at that point, you can kind of say, if we're not moving forward on our future goals or saving to get to them, where can I start making cuts, or what's a bigger priority, living today or having freedom for tomorrow? And that's not for me to decide. That is for our clients to decide, but help them kind of shine a light on it so they know where they're at. I also want to mention this because I think, Audra, we're talking to people in the real estate community on your podcast. So many people I'm surprised at, and it's changed through the pandemic. I think we went through a pandemic and a scare, and people started hoarding some money. But before the pandemic, I would ask people if they had what's called an emergency fund, and they would say, that's my credit card. Well, that can be a plan, but when an emergency comes and it's got a 20% interest rate tied to financing the emergency, it's not a good plan. So I typically tell people from the beginning, consider getting a 3 to 6 months of emergency fund, 3 to 6 months of living expenses set aside, liquid, that you can get to if an emergency happens. Now, my hope is that an emergency never happens.
Absolutely. Let me ask a quick question. Yeah, sorry, I didn't mean to interrupt you, but that's one thing that we're talking to clients about right now, Mark, is, some people have been in their home and they're like, we're not moving. You helped us find our dream home. I'm like, okay, look at the equity, reach out to your bank, and at bare minimum, get a home equity line of credit. So with that home equity line of credit, that could potentially be an emergency fund, if some, or a source of an emergency fund for you. So if you do have equity, you don't pay them on a home equity line of credit until you draw money away. So again, don't use it to go to Disneyland. Use it for when you have an emergency, you get in a car wreck, surgery, whatever. But those are the things. If people don't have an emergency fund, my younger clients, I'm talking to them about setting that up as a home equity line of credit to have that right away, so they at least have something right now. Is that okay advice? I mean, I'm not the financial planner, but I like to help people financially look outside the box and look at the different ideas.
Nothing wrong with that idea. I think it's okay, and it's fine to have a balance for open access to a home equity line, but not use it to that point, knowing it's always there if you can get it. But I still encourage people to consider putting cash set aside into an account that they don't plan on touching 3 to 6 months of living expenses. And in your industry, I'm talking sales, lenders, real estate, because the business does this over time, I think it's very, very important to maybe consider having a larger emergency fund, because there's going to be months where you go by that there's no emergency, but guess what? There's a change in the economy and what's going on in your sales cycle. And a lot of people in real estate realize that happens November through February, right? And so tapping into maybe the cash reserves, and it could be considered the emergency fund through those periods, can be helpful for you so you don't have to finance through them, if that makes sense.
Yep, so absolutely.
I will also mention this now, and we all know where interest rates are based on where the economy is a lot of people had that emergency fund in their bank account earning next to nothing in interest. Over the last year, because of the rise in the interest rates, there's now high yielding money markets available and they are paying over 4%. You've heard of them. You can Google high yield money markets. We make available access to our clients, one that called Flourish Cash, but there's several others. If anything, if you're carrying 3 to 6 months in cash, you should be getting a return on that, and 4% on a sizable balance ends up being a big amount of money. So I want to make sure that you're using that money. It's still liquid in a money market, but at least it's earning a higher interest rate. I think this is kind of a common sense, but I encourage people to get to pre-funding major expenses. I want to see them have the ability to walk into the car dealership and do the negotiation from a standpoint of, I'm willing to pay in cash for that vehicle. I think that if you can get to that point, you'll feel a lot better, you'll get better deals, and you won't have to go into debt with interest rates that could be all over the place. Lately, they're very high, but pre-funding major purchases on down payment of a future home, future car vehicle. And a lot of times it's kind of like, well, I'm going to trade in my car. Well, you owe something more for the new vehicle than your existing car. So I want to encourage you to say, how much longer till I need the new vehicle? And how much per month do I need to save to get to that balance to buy the next one? And if you can just pay yourself first and just set it up automatically, and maybe it's just another bank account or a high yield money market, it gets built within your budget, right? And if you can build your budget and know that you're already doing all of those things from pre-funding standpoint, and there's money left at the end of the month, feel good about spending it, take the vacation, enjoy your time. A lot of people, they do that, and then there's no savings or investing for the future, and they wonder why they wake up behind. So I want to encourage people to pre-fund things and automate the savings. Now, having said that, we can talk a little bit about investment management. There's several things you can invest in. We won't get into the details of this, but our firm particularly does it with the equity markets and debt securities markets. Not a sexy way. They're all liquid assets, but they have great results over the long term, albeit there's some periods in the economy where you might not get positive results. And those are opportunities to invest and buy things on sale. I often tell people to also systematize the savings and investing. So if it's investing for your retirement, if it's investing for your child's college education, the ones that are more long-term, like retirement and college education, I'm going to suggest you consider investing in the equity markets based on a risk tolerance that you're comfortable with. And people think, well, I have 10 years till I need that money. In that 10 years, you can get money in the equity market to double over time if there's a risk and it's a good period. I even wrote down this because people often forget about this, but if you invest $250 a month, earning an average of 6% rate of return over 25 years, it ends up being $173,000.
Wow.
If you do $500 per month, 6% over 40 years, it ends up just under $1 million. So it's a big difference on the amount, but the time is the biggest difference, right? You want and need to start as early as possible. So many people will call me at 55 or 60 and say, I'm going to retire in 3 years. Can you help me get there? Yes. What's the inventory of what you have and where you want to go? And that's what we work towards. So some people are still on track, but a generation today doesn't have the luxury of the generation before us that had the pension plan set up for them. Yes, Social Security is still there, but you're still going to need likely a pile of money that's invested and diversified in different tax buckets to be able to pull from in retirement. And some people are surprised about what that number needs to be. Or I'll even mention this in your industry, Audra, where a lot of people don't pay themselves salaries, right? And so if you're not paying salaries, oftentimes there's not FICA tax being paid for a future Social Security benefit. And so some people wake up one day wondering why their Social Security benefit is so small. It was because they weren't paying FICA taxes and weren't paying a salary. So that if you're not paying yourself a salary, it might be something to talk with your accountant about as you consider future benefits for what will supplement your own retirement savings.
And that's huge. And I think that's one of the things why when you and I started talking that was so helpful for me, because again, you get so focused on one, getting a job, one growing and then growing that career. And then all of a sudden you're having a family, like you just go, and you forget to take a deep breath and figure out and get a strategy and planning and doing those little things, like setting a bit. I will tell you, and I'm sharing to the audience out there, there was a time when the real estate market started getting slow and I kind of like, okay, Mark, I'm going to stop doing my monthly contributions because I need this money just in case. And he's like, no, you're not. I'm like, and of course, if anyone knows me, I'm like, you're not the boss of me, Marc Shaffer. But he did. And I didn't change it. I kept it in there. and I've been fine the whole time. But you made one other comment I wanted to interrupt or stop you on, of just, you asked the question to people of how much do you need to retire? And they don't know. I want people to know I didn't know either. Like, I didn't even know where to start. Like, how do I know? I don't know. Like, my biggest fear down the road is I don't know. Like, I hear how much nursing homes are. Someday I guess I'm probably going to be in one. So that's where you have exercises, you have tools, spreadsheets, forms, like things for us to fill out to help us come to that answer. So that's really what I loved about, yes, you asked the question. Yes, I answered, I have no idea. But then you gave me the tools so I could break it down. So instead of having this big, massive question, answer this, then this, then this, I'm like, oh, I got this. This is how much I need now. So it was very, very helpful. So obviously, I know you've been doing this for years in your company, but as somebody that is not in that, that was extremely helpful to go through that process to figure out exactly what I do need and what my husband needs. So, yeah.
Yep, exactly. We used to do a plan all at once, sitting down 4 hours with clients, and now we try to break it up a little bit over time. But to your point of, we don't want to overwhelm people. Let's just tackle one part of the plan. And guess what? The plan changes. Assumptions don't happen the way they're supposed to. Careers change. Sometimes it's because bigger success has happened. Business is better than they ever imagined. And now it's time to reimagine what the future could be like. But to your point, yeah, we help people figure out what the goal looks like from a concrete standpoint, measurable, trackable, right? Otherwise, it's this nebulous of, I want to retire someday, but I don't even know what that looks like. But I'm 65 and I don't want to be working. All right, well, let's break down what that looks like, how long we have to get there, and how long you're actually going to be retired. It's funny because we even ask people, when are you going to die? We want to, a lot of people, we want to help them spend their last dollar at death if they don't want to leave a legacy. And so I know nobody knows when they're going to die, but we use statistics to kind of arrive at, it's likely that you're going to live to these ages. And a lot of people have an opinion on that too. I'm not living to that long. Well, if you do and you've spent your last dollar, that's going to be an interesting conversation to have with your financial planner or your spouse about well-being going forward. And so, yes, it's breaking it down into tangible things. And fortunately, in my industry, software has made it easier in a way to illustrate impacts to changes on the fly for clients during meetings, which 20 years ago, it was, let me meet with you in a week. I got to spend 8 hours crunching numbers, doing a spreadsheet update, and then I'll present to you what it looks like. I'm so glad things are continuing to evolve, but you're right. Helping people understand their goals is a big deal. And then making them realize if it's a priority, here's the changes they need to make before then. One of the biggest things I see happening to people is living beyond their means. To your comment of then family, then kids, then life. Well, a lot of people around their 40s get to this point where they're reaching a success in finances and success in, maybe they're not having any more kids at that point. So they've reached this plateau of, this is what I want my lifestyle to look like. I'm in the house I want to stay in long term. And then the advice becomes, if you're doing well and making extra, what do you need to do with the extra above that standard of living that helps you meet those goals? And oftentimes it's a conversation about, you need to cut back on something, or ideally, if they're doing well financially, they can meet all those goals by identifying where the excess money is going. It's not a one and done. It's not meeting with a financial planner, in my opinion, once and making one plan. It's an ever evolving plan and something to stay up on and meet with an advisor regularly.
And I think that's what, I'm going to interrupt you real quick. Sorry about that. That's one of the things that I have enjoyed working with you, is that we are meeting regularly and not once a month, or I can shoot you a message. And so I've never had a financial planner until Mark and I started working, and now I'm the biggest advocate of it. So one, he's always looking out after our best interests because he has a fiduciary responsibility. That is so important. I wear a fiduciary hat when I'm helping my clients buying a home. So it's not everybody that works at Keller Williams. It's just me. I'm your designated agent. It's just you and I as a client. And that's the same thing I have with Mark, is that he is helping my husband and I and my kids create a plan. He's not saying, oh, well, this is the new life insurance policy that our company has, or this is a new portfolio that we're trying to sell to you. Okay, well, how does that fit into my plan? And that's one of the things that I like about having a fiduciary like yourself, Mark, is you're not trying to sell me the latest and greatest. You're not selling me anything. You're helping me create a plan and a strategy. No different than kind of your ongoing, why do you go to the dentist? It's to make sure you have teeth. You do regular visits with the dentist. You do regular care. It's the same thing. Am I saying that correct, Mark? I mean, that's kind of how I feel as somebody not in
Here's
the
what I would
industry.
say. as a fiduciary, it's my legal responsibility to do what's in our client's best interest, not my best interest. Obviously, I have a financial incentive to engage with clients and have them hire our team, but we get paid a fee rather than any commissions, and rather than no matter what we provide to someone, we get a fee for it, right? And so it's good to be transparent and know where clients are in terms of what they pay us, so there's no hidden anything. So yes, I think it's a big deal that's fiduciary. Now I will switch directions on you, and I know.
Go for it. Yeah, because we'll talk. You and I will talk for hours. Go for it.
Yep. So I'm on number 3. We talked about insurance, and unfortunately, insurance gets paid with a commission to an agent. Years ago, I helped buy insurance for clients, or helped clients buy insurance. We have converted to a fee-only firm, meaning we don't sell insurance, we don't get a commission. We decided to remove the conflict of interest in selling products, that we wouldn't do that anymore. But that doesn't mean we don't do the work anymore for helping clients understand what they need from an insurance perspective. And so I think that's a very important part of the plan. And when you're talking about insurance, people think of life insurance, but I also suggest, I think you mentioned at the very beginning, long-term care insurance is something that is very expensive, but if you've paid for a family member or seen a parent go through what long-term care expenses could look like, you're then more interested in insuring it from the future. Disability insurance. Working over the years, I've seen people with several clients die prematurely, get disabled for life. And so I think it's important to make sure that you're insuring against these things, understanding and hoping that they never happen. Now, life insurance isn't just supposed to pay for the burial plan. Life insurance, to me, is to make sure that your survivors, if you have dependents, are going to be able to live the lifestyle that you're willing to insure against. So in an example where both husband and wife are working, one husband passes away at 50, it's likely that there was 15 more years of income that they're not going to have now, that puts their plan off track. And so what we help people identify is what's a death benefit amount and a way to structure the insurance so that they can buy it from their friend, from someone we can recommend, from anybody that's qualified professional for insurance, but to make sure that that gap is kind of, and open liability is gone, because if something happens, they know that the money's going to be taken care of to meet those future goals. Same with disability, same with long-term care. I will tell you that we do help a little bit with property casualty, but Audra has several people that she can probably refer you to. As I don't sell that, I don't help with it, but I make recommendations for you to work with the agent you currently have. But in any event, insurance often is not thought about as the financial plan, but if you don't have it, obviously one of these things could throw the plan off altogether. So get a good insurance agent, ask for us to recommend someone. We both work with good people. The 4th thing I'll tell you about covering your bases and knowing where you stand is estate planning. So you started that meeting from the beginning on mentioning someone who had passed away. Now, estate planning, people think, well, I've got a will, that's all I need. For some people, it might make sense, and that can work. And there's ways that you can title assets. And I'm not an estate planning attorney, so I'm going to recommend that you check with your estate planning attorney on all these things. But for a lot of our clients, we help them review what they have in place and tell them the reasons why they might want to consider additional documents in place of a will. Now, a will is very, very important for someone that has young kids, because it labels a guardian for who will take care of their kids if something happens, if the state dictates someone that maybe they don't want their kids to be taken care of by, and usually it's bloodline. So I would also mention that it's worth reviewing and knowing if it's a priority for you to have healthcare directives, power of attorney for both finances and healthcare decisions. And those aren't phone conversations to have, because you're dictating someone to make some life or death decisions for you, or dictating what your quality of life might be like, meaning when should I suggest that my family pull the plug, right? Everybody has a different opinion on this. And asking for people to be put in place that can make those decisions in addition to physicians is always hard, but a good idea to do. I will also mention, and I won't talk much on it, but having a trust may be something that's of importance to you. And some people think trusts are for rich people. Trusts are ways to protect future beneficiaries or put in place things that you want to have happen with your future dollars, so they have a direction on what should happen at death or even years into the future after death. And I think of this as being kind of important for people with young kids, understanding that if both spouses died, there's at least direction in how the money is invested and how they get access to it in the future. And a lot of people think, well, I don't have any money because I'm a young family. I start going over, you have equity in your house, you have some retirement plan accounts, and they're only getting bigger by your additions over time. And if they followed recommendations in terms of ensuring income with the life insurance policy, if something happens to both of them, it's a pile of money they can't imagine for future benefit of a 5-year-old. right? And so the trust would just dictate how they could get it later on in life and maybe have stipulations on things they would be required to do to get access to principal outside of health maintenance and education. So I'll leave it at that. Estate planning is complex. A lawyer has to draft those documents. I'm happy to talk with anybody about thoughts or what we've seen work well for people, but definitely oftentimes a will is not enough. Audra, I like your comment from the beginning.
Yeah.
So the fifth thing and the last thing, and I hope I'm still doing okay with time, is I'm going to suggest that people get help. Like someone needs help with buying and selling a home, oftentimes it's not what they do for a living, and they only buy or sell a home a few times in their life. So working with an agent is a wonderful idea. I actually sold a house for sale by owner years ago, and I could write a little blog about how it wasn't a good experience, but it sold and it was fine. And it makes me wonder how much easier and better and maybe even more money could have come out by working with an agent. So like working with a real estate agent, I think working with a qualified financial planner is a good idea, as Audra mentioned from the beginning. She's already mentioned that fiduciary is very important for considering someone to work with. I'll also mention the word if you're looking as a fee-only advisor, someone that doesn't get paid commissions, that get paid a fee only from the clients themselves, not from other companies. I will also mention that a reputation, being around a long time, having experience. Since I started when I was 23, I didn't have experience and hadn't been around a long time. So I tagged onto a company that had been and found a mentor that helped me for years, that had been in the business 25 plus years when I joined this team 17 years ago. So the bottom line for that piece of advice is don't go it alone. Find someone that can help you. Actually have a piece that I'm happy to send, or Audra, you can make it available to the listeners. That's the 5 steps to finding the right advisor that mentions some of these things too. But definitely want to work with someone, and it's not a one-time and done. It's an ongoing relationship to make sure that they're steering you in the right direction for what your family goals are.
That's excellent. Marc, talk to me. Obviously, I was introduced to you. So if we have someone watching or one of our clients, and again, this is on Facebook, so there could be someone out in the public. How do they, like, is there a fee just to come meet with you? I know attorneys sometimes will do a first consultation is free. Like, do you do something like that where you could at least meet and kind of brainstorm and talk to them and then talk to them? Walk me through that process. What would be someone's next step to reach you?
Oh yeah, so I'm happy to meet with people. I have a team of people that's happy to meet. We don't care about location. Matter of fact, half of our team is not located in Kansas City, although this is where we're headquartered. So that doesn't have to be a big deal. Reaching out with just an email, going to our website, searcyfinancial.com. We've also got a secondary company called Alos Investment Advisors, and that company was created to work with people that didn't otherwise meet minimums that we might have at Searcy Financial. So I don't have to pre-qualify anybody, and we're happy, our team is happy to help anybody at any level. It could be starting out from scratch for a 21-year-old with their first job to someone that's got complex estate planning issues and financial planning issues at 60. It doesn't matter to us. We'll tell you more about the services that we can provide with both companies to determine what's the best fit, but a minimum amount is not a big deal at all.
I want to reiterate that if you have not hired anyone or ever started in this plan, don't do what my husband and I did. We talked to several different people and they're like, well, you don't have enough in savings, or you don't have enough in stocks, or you don't have enough money, basically is what they were saying. And so we never hired anyone because we thought we were kind of losers. We didn't have enough stuff. And what I just heard from you, Marc, is if someone is straight out of college and starting, you or someone on your team can still help them if they have $100 in their bank account. Is that correct?
Yep, that's what our subsidiary company, Alos Investment Advisors, was created for. And it's really the future of our business, because my hope is that people hire us for life, right? Whether it's a 22-year-old and they work with us till their last day, and my plan is to have a succession plan like the founder of our company did. But yes, that is definitely doable. And we've created a model where we can help people in that regard.
That's huge, because that's one of the things, even in my world of, I used to work for a developer and only could sell those development. I wanted to help everybody. I didn't care if you're buying a $50,000 home or a $5 million home. I wanted to use the knowledge on my team to help. And so that's what we've done. So that's where I feel like you and I align. Now, it may not be me every single time, and it may not be you every single time, but we oversee and have the staff that can take care and get you the right fit and the right person to grow. And I think you're a couple of years younger than I am. And so I think we're set for life, because you will probably outlive me. So we're good. Like, I'm ready to rock.
I just got to work a long time. So when you're, I'm going to work through your retirement. My plan is to find the next me and a 20-year-old someday, and we're continuing to expand. So that's a good comment. There's people on our team that are 25. We just hired someone full-time that will work with peers. It's kind of enjoyable to work with peers, because in the beginning I was working with people 30 years older than me, and that's fine, but it is enjoying, well, you see this too in your industry, enjoying helping clients that also become friends and family that you want to help and see successful. And if we do this right in both of our businesses, it's just a blessing to be able to do what we do.
And help multi-generations. I've helped multi-generations, and I know you do as well. So
for sure.
Excellent. Well, we're wrapping up here on time. Is there anything else you would like to cover that maybe I didn't ask you about, Mark?
Not that I can think of. If there are, I'm happy to have one-off conversations with any of your listeners. So certainly reach out to me. We've got Facebook pages. We have a newsletter. If you want to see any more information or find ways to follow us, you can go to Facebook and look at searcyfinancial.com or alosinvestmentadvisors.com, and certainly reach out to me. It's Marc with a C, Marc Shaffer. I'm happy to have ongoing dialogues.
Perfect, Mark. We will put those Facebook groups and your website in our information. Is that the best way to reach you? Do you have a office number, or is it easier for everybody to go online to kind of track it that way for you? What's the best?
I love email. I'm very responsive, but you certainly can call me anytime. My cell phone number is 785-317-2261.
And tell us your email address one more time, please.
Marc with a C, so M-A-R-C at Searcy Financial is SEARCY financial.com.
Brilliant. Awesome. Mark, I appreciate your time. Please send me that PDF about the 5 steps so I can add that and we can share with our clients. And I appreciate all that you do for my family. I know there's some people that I work with that also use you and your team and other clients that you have been helping. So we're extremely grateful. I hope you get some more clients, as well as end of the day, you're helping people make a plan and going over the big picture, and not just one thing, but all 5 steps. And that is so, so important. And again, at Audra Heller and Associates, we always want to connect people. We want to provide that information coming from contribution, whether it's real estate, estate planning, everything. So Mark, thank you for helping us live the best life we can, and planning and enjoying it and working hard to play hard. I appreciate you.
All right, guys. Thanks for having me on.
All right. Thanks, Mark. Take care.
Yeah, you too.